Just when you thought it could not run any higher, Tesla is up an additional 5% after hours. Are you kidding me? Now, let's be fair. This was a little bit of a glitch. The stock did not go down to $400 after hours. It just didn't. Because if it did, that would have been historic. Down 75%. All right, it's a glitch. Don't worry. It didn't happen. But yeah, stock's up 5% after hours, even after being up 1.5% in the normal trading session. Let's take a little look here and see what in the world is leading to that. And when I tell you I'm surprised by these earnings, I'm freaking surprised, right? Non-GAAP EPS of $2.18 may not be comparable. Obviously, we don't compare that. It's non-GAAP. They're measuring it how they want to, so I don't look at that. I look at this GAAP EPS of 50 cents, which is incredible. That is legitimate profitability. That's incredible. I did not think this company was going to post profitability this quarter. I didn't think they would. So I am very impressed with the 50-cent mark. Very impressed, and I think investors are as well. Now again, the price of the stock isn't right. It's not quite right, but it's good to see profitability. There's many reasons for that. We'll get into it. Revenue of $6.04 billion, which was down 5% year over year. Still beat by $640 million, so it was a very good beat. Very good beat. They were expected to fall 10%, so that's good to see. Now again, you see other car companies really that did show growth in their most recent quarter, but again, what can you say? Pandemic quarter, it's hard to necessarily say and do a fair comparison there, so I don't blame them at all for being down just a little bit in terms of revenue, because I think they can build that up with a couple new vehicles they have coming up. Automotive gross margin of 25.4 versus 24.1 consensus and 18.9 of last year. So you see growth there, and that's where they're getting this profitability boost, is finally growing that margin. Now the main thing here for Tesla is there's a chance they could be included in the S&P 500, which is massive. It's good to see that because they need to have consecutive quarters of profit, 4 consecutive quarters of profit, in order to be able to be on the S&P 500. So this is definitely a company that would be there potentially, so I'd like to see that. And from their earnings call, we found that the third Gigafactory will be in Austin, Texas. Not a shocker. We assumed this would entirely happen because of the fact that, well, Elon's been talking about going straight to Texas for a little bit now. And a lot of it's because it's a rough place to work at. They talked about moving the HQ to Texas, but pretty good move for them to, obviously you see expansion there. Building these gigafactories is massive expansion. So you gotta love to see it. So we also have naturally our presentation, which is pretty exciting. They went ahead and gave me a presentation. It just says Q2 update, which is nice. So we love seeing that. Let's look at this slide real quick and see what we got. We don't care about that. Get this nonsense out of here. We see some very, fine print charts, which we love to look at. And let us see what we got. So automotive revenues, you see Q2, if you're comparing year over year, which we like to do, down 4%, but quarter over quarter you saw a little bit of growth there. Total revenues in general down 5% year over year, but up 1% quarter over quarter. Pretty nice. Now, one thing you need to mention is operating expenses actually decreased year over year. Good stuff. But obviously that's a decrease, I should say. By decrease, I should mean increase. You know what I'm saying here, okay? They spent more on expenses this year. Not a shocker as a growing company. But it's hard to compare. Quarter 2 is a very good quarter for them last year. So adjusted EBITDA this quarter was not great. But this is entirely the pandemic quarter. A quarter in which a lot of companies really just are struggling major. I mean, we're talking 70% falls in EPS. So I don't find this to be that concerning for Tesla. Not concerning at all. So, our operating profit improved in quarter 2 despite challenging circumstances. Positive impacts including lower operating costs due to a temporary reduction in employee compensation expense. And again, that means people were not working. What a shocker. They couldn't work. It was in California. But that's what happens there. So a little bit of a save in expenses that way. You do love to see that. As far as the vehicle breakdown, we look at total production in general. This quarter delivering 87,000 vehicles. Now, it's definitely a little bit of an improvement year over year. Okay. Little bit of an improvement. I have to say that. But it's not beautiful, right? You see, it underperformed Q3, Q4 of last year, or I should say, it underperformed every quarter of last year's. That's what I need to say. Sorry. That's disappointing, you could say. You could definitely say that, but again, we talk about pandemic quarter, and what do you expect? Model S purchases definitely were down. Model 3 were down quite a bit too. But, I mean, that's as much as production's concerned. Now, delivery is kind of the bigger story here. We like to talk about delivery. Production's obviously down because the factories were shut down. Okay, but deliveries, the only quarter they outperformed was last quarter, Q1. So they did not, year over year, we saw a decrease of 5%. And again, I think that's entirely related to, more of issues with the current environment. One thing you need to mention when you talk about Tesla is obviously the expensive vehicles. And in any recession type environment, obviously, we can talk about any sort of potential disasters that come with recessions as far as people spending money. People spend less. Right now, I would say, though, retail spending is at historic highs. So spending isn't the issue right now, I don't think. So I don't think that's necessarily something to be concerned with quite yet. It depends on how deep the recession goes that we really need to see if we need to be concerned about this. So obviously, as they talk about factories, the Berlin factory, they say, is coming along super well. Core technology, obviously, continuously improving the autopilot features by developing. What is wrong with me? The brain's not functioning, but developing really maps for every single road that's out there. And again, they have one of the most expansive mapping as far as autonomous driving is concerned out of any company. The most advanced one, absolutely, most fulfilled. You see the Shanghai Gigafactory. Obviously, it is the name, Gigafactory, baby. This thing's massive. Here's the Gigafactory in Berlin, or what's coming up of it. Ooh, and that is what it's going to look like. First off, if that's what it looks like, that thing looks freaking gorgeous. Oh my gosh, that thing looks beautiful. Will end up looking like that? Probably pretty close, I gotta be honest. And look at all these solar panels. That's right. They're powering their own buildings. Not entirely, but obviously solar's not going to support that much. But still. Pretty nice. So key metrics, obviously, operating cash flow is a big one in the middle here that you like to look at. You see this quarter, you saw some improvements there. Not really a good trend, though. It's really hard to find a trend out of this. I don't know. You can't really find a trend. That's all I could tell you. Q1s tend to be bad. I mean, it's tough to look at. Net income, though, you kind of see a trend into positivity, which you do like to see there, and we need to see that continue, no doubt about it. Trailing 12 months, though, I can't speak. Trailing 12 months, though, that's where you see the improvement. Finally, profitability. Finally, right? This is definitely improvement for them. That's what you like to see if you're an investor in this company. Balance sheet is the last thing we look at as usual. And we will take a look at, obviously, the assets. Current assets or cash and cash equivalents. I want to look at, obviously, the far right. We want to look at the far right here, okay? Cash and cash equivalents, as far as year over year, we see 8.6 billion versus 4.9 billion of a year ago. But that won't hurt me. Total current liabilities of 1.2 billion. Wait, oh gosh, he's lost his mind, of 15.3 billion versus 10.1. So you see an improvement there. And again, I mentioned this with every single company. You see both a difference or an improvement in terms of assets, but you see an increase in liabilities. So I'd like to see if this is true for this company. Total assets of 38.1 billion versus 31.8 of a year ago. So I like a year-over-year comparison. As far as liabilities are concerned, total current liabilities of 10 or 12.2 billion, I should say, versus 9.5 a year ago. Total liabilities in general of 26.7 billion versus 24.7. So overall, they grew assets more than they grew liability. You got to respect that. You got to respect that for this company. And overall, stockholder equity did rise as a result. So you like to see an improving balance sheet on a company like this, especially as they turn towards profitability. They need that balance sheet to be looking good. And right now it is. Stockholder equity isn't quite as great as I might like to see, but there's definitely improvement. So I like to see it. As far as buying Tesla, again, I don't think this is... I can't justify the valuation at $1,600. Son of a gun. You know I can't do that. I can't justify it over $1,000. So I'm not personally. If you're not in the stock, I don't think now. Please don't get the fear of missing out and buy it right now. And again, you could if you think it's a valid investment strategy. You talk about the long term. I think you'll still be making money. But I don't think in the next year you'll be making money off this stock, because at some point, and I could be wrong, at some point maybe there isn't a cool down, but I think at some point there likely will be. And it could be rough for people, but it just depends on how the market feels. If the market keeps on this mega bull run, Tesla's just going to keep on roaring, baby.